Hey guys, what's up? Alec back with the daily stock market, and look at that. We have a super red day on our hands. SoFi leading the pack down 10%. The Fed's released a 75 basis point hike as expected by Pypl at around 11 a.m. Pacific Standard Time over in California. And we saw the market, the S&P 500, go up around 1%, which was a big move. But as we can see, it was a fake out breakout because shortly after that, we saw the stock market go down around 3%. On top of that, we had a big earnings day. Stocks like Etsy up 10%. And the biggest mover, Roku, down 19% after hours on their earnings release. So in this video, we're going to go over some of the most volatile and popular stocks. So if you appreciate the content, just drop a thumbs up on this video. If you do find value in this video, and if you're already subscribed, hit that post notification bell on YouTube so you're alerted as soon as these new videos come out. So before we go too much further in this video, I want to do a recap on earnings today. We had Roku, Qualcomm, Marathon Oil, Robinhood, Etsy, all reporting earnings after hours. Thursday before the open, tomorrow we have Royal Caribbean, Moderna, Crocs, Datadogs, Peloton, Nikola, and Penn National Gaming. Okay, so those are all interesting stocks to be watching tomorrow morning. After the close, it gets even more interesting with PayPal and Coinbase both reporting after the close on Thursday. We also have Block reporting, Warner Bros., Twilio, Starbucks, Carvana, Cloudflare, and Friday we have Fubo and DraftKings both reporting earnings on Friday. So the first one we have to talk about is Roku because they are down 18% after hours with an additional 4% downward movement on the day, with a total down around 23% in one day. Roku is now at $44 per share, and in the last 1 year, it's down 86%, which is astonishing, and it even has an all-time high of around $450 per share, which is absolutely absurd to think about that it's only $44 per share now. So to get back to its all-time high or to pass old all-time highs that it currently set just 1.5 years ago, by the way. It's not like this was 5 or 10 years ago, just a year and a half ago. It would have to have a 10x or an 1,000% gain on its stock price to get to $400, $450 per share. So that's why this stock is so interesting right now, and a lot of people are interested in it and want me to talk about it. So the first article that we see Roku Q3 earnings, streaming platform post revenue beat, stock hammered on outlook, weak advertising comments. Roku reported third quarter revenues of $761 million, up 12% year over year. Guidance and comments on advertising markets have shared trading down on Wednesday. So what happened? Roku reported revenues of $761 million, up 12%, beating Wall Street's estimate of $702 million, which is actually a pretty big beat. Platform revenue in the third quarter was $670 million, up 15% from a year ago. The company said that this was lower than historical growth, but also noticed it might be positive in the difficult macro environment. The company also added 2.3 million active accounts in the third quarter. Roku ended the third quarter with 65 million active accounts worldwide, which is huge. Total streaming hours were 21 billion hours in the third quarter, up 1.1 billion from the second quarter, which is some good growth to see also. Okay, streaming hours for Roku channel were up 90% year over year in the third quarter, which is more good news. The company said advertising spend is growing more slowly than earlier in the fiscal year. Roku has an average revenue per user of $44 on a 12-month trailing basis, up 10% year over year, which is more good news. Okay, what's next? Roku sees fourth quarter revenues of $800 million, shy of current Wall Street estimate of $895 million. We expect the macro environment to further pressure consumer discretionary spend and degrade advertising budgets, especially in the TV scattered market, the company said. Okay, so this is why the stock is trading down because of the guidance that it put out. okay, which could be an overreaction, honestly. And keep in mind the fourth quarter revenue guidance was 95 million less than what Wall Street was expecting in that first paragraph where it says what's next. Okay, so if we keep scrolling down, we'll see Roku sees this being a temporary issue, but said it's hard to predict when it will rebound. We believe the strong growth in the scale of engagement of our platform, combined with continued consumer shift to TV streaming, position us well for when the ad market improves or rebounds. The company highlighted a continued focus on scaling to markets outside of the US, with the Roku channel recently launched in Mexico among highlights, which is good news as well. Roku also plans to grow and diversify with the launch of new smart home products that were announced last month. Roku will offer cameras and video doorbells that come with subscription plans and could add recurring revenue to the company, which would be amazing to see Roku do something like that and actually succeed. Smart home products are available through exclusive partnership with Walmart. We believe every device in the home will be smart, but it's still in the early days, as approximately only 20% of US households have cameras. We are well positioned to be the leading smart home platform as we have strong brand and delivering seamless experiences at consumer-friendly price points, which I disagree with. I think, Amazon Ring Doorbell and even Nest, like Google Nest, are way ahead of Roku smart home devices. However, if we look at what analysts have to say, they have a 48% exact upside over the next 12 months. That's on average across all the analysts weighing in. We have an $80 price target on Roku over the next 12 months. If we scroll down, we can see that these were reiterated not that long ago. Some of these analysts aren't the best analysts also. Not a lot of them are 5-star analysts. Here we have a few 4 and 5-star analysts, but they reiterated their price target over 2 months ago. So you could take that with a grain of salt on the analyst price targets. Overall, I think Roku could be a good risky swing trade if you have spots available or a position to fill in a risky portfolio for a longer term swing trade. In my opinion, I think we can see Roku closer to $40, $35, and even $30 per share. So I have price target set at 30, 32, and 35 to actually start buying Roku. I don't have any shares right now, but I will be willing to swing trade around $30 per share or even $35 per share, which I definitely think is possible for Roku. And considering that just this morning it was at $60 per share, nearly $60 per share, I think $35 or even $40 per share could be a good discount to pick up some shares at. And here we can see that it looks like Roku is starting to bounce back just a little bit, up around 3%, and from its very low, it's already up around 5%. So the question is, tomorrow morning when it opens up, will Roku bounce back around $50 per share? Will it hover around $45 per share? Or will it continue lower into the 30s? So I think tomorrow will remain pretty flat on Roku. I think that it'll probably close around $47 per share, $45 per share, or even $43 per share. Now, Etsy was the other big mover of the day, up 10% after hours to $96 per share. And if we go to the 3-month chart, we can see that they've been following this support and resistance here. And it looks like they're playing the technicals pretty well, because it is bouncing up from the support closer to the resistance. So I think there is possibility that we can even see continuation into $100 and $105 per share for Etsy in the next few coming trading days or the next few coming weeks. We also, if we scroll down, we can see that we have a PE ratio of 32 on Etsy, by the way, with a market cap of $11 billion. Okay, 52-week high of $300 per share. If we click into this article, we can see why Etsy shares are soaring after hours. Okay, shares are up nearly 10% after hours on Wednesday after the company reported strong top-line financial results. Etsy said third quarter revenues increased 11% year over year to $594 million, which beat average analyst estimates of only $564 million. Okay, the company reported a net loss of $7.62 per share. So we actually saw the CEO of Etsy say, "We are pleased that Etsy's business has remained strong in a volatile environment, and we believe our sustained performance is a testament to Etsy's unique position in the e-commerce space, where in a world of mass commodities supplied by companies obsessed with speed and scale, Etsy is the antidote." And that's what the CEO of Etsy said. Etsy expects fourth quarter revenues to be between 700 million and 780 million versus the analyst estimates of 740 million. Now, moving right along, we have PayPal down to $79 per share. They're reporting earnings tomorrow after the close on Thursday. They're down 10% in the last week. And we can see that they've been following this downward pattern also. So it looks like they're near the support right now. And pretty recently, we'll talk about it a little bit more in details in this segment part of PayPal, but they could be heading closer to that resistance. Okay, so here we see the channel. So if we dive in a little bit deeper into PayPal, we can see that they're down 65% in the past year. Now, other banking stocks like SoFi and like JPM, Bank of America, had strong earnings reports, by the way. SoFi, after its earnings, was up around 15%, but then it went on to sell off around 18% after that. So it almost goes without saying that there's going to be elevated tensions and elevated volatility and elevated risk trading PayPal before earnings. Okay, maybe waiting after earnings and being more defensively and seeing if PayPal can drop to around $75 or $72 per share and swing trading it back up or doing a call option back up could be a little bit better. As we can see, the overall trend is down in the last 3 months on PayPal. So if you wait for it to pop back up, you know, if it does have a good earnings and it pops back up to the resistance, it could be a good option to do a put option on the way back down after it pops up for earnings. And I should say if it pops up when it reports earnings, because the overall trend is down. So it could be safer to play PayPal after earnings and more defensively. However, with SoFi going up on earnings and JPM and Bank of America, there is definitely a chance that PayPal could beat earnings when it reports. However, we're not going to do a deep dive in this video if they are going to beat earnings or not. If you want to see exactly what I'm personally doing, if I'm buying a call option or a put option before or after earnings, message me on Instagram. I have a few more spots on my close friends list where you can see exactly what I'm buying, how much I'm buying, and everything in between. Also, check out some of these success stories. Click on success number 5 or success number 6 and read through some of the recent success that we've been having with the program. Over 500 positive testimonials now, and thousands of people signed up for the close friends list. It's paying off for many, many people, and now is a busy earnings season to make some money. So take some time, read through those highlights. Success number 6. It's as simple as just messaging me on Instagram. I'll send you over my website and an application so that way you can see if the program is for you. Thank you so much for all the love and support you have been showing me on YouTube and Instagram. Share this video with a friend if you think that they will find it helpful. Remember, subscribe if you're not yet. Double check you are subscribed. And if you found value in this video, hit that notification bell so you're alerted anytime I put out a new video. Thank you guys for watching to the end. You guys are the best. Comment below if you made it to the end of the video, and I'll see you guys in the next one. Remember, don't time the market, buy the market. Peace.